providing central banks and policymakers the tools they need to manage the challenges of a multipolar world is part of Kathleen Tyson's remit. The financier led the operational design for CLS Bank, taking the FX market to more than $14 trillion in daily settlements. She's also helped with central banks and the implementation of digital real-time operations. Tyson has a take on geopolitical trends too, including recent moves by the BRICS group of nations to form an alternative trading bloc to the West. We caught up with her at the 2023 Investors Forum. So Kathleen, throughout history there has always been a predominant single currency. Do you think that will change?
Well, I'm hoping it will change because the cooperations and collaborations that are coming out now, particularly the BRICS Plus, Brazil, Russia, India, China, South Africa, and now 6 new states that have been invited to join, which are UAE, Saudi Arabia, Iran, Venezuela, Ethiopia, and Egypt. They're all very, very different states. They have very different national interests, very different cultures, very different histories, and yet they are aligning to cooperate with each other in joint development. And they each bring different strengths that they can leverage into that cooperation. And some people criticize BRICS because it has no head office, has no budget, it has no management, it has no staff, has no rules. It's not important. But what they're missing is on the side of every BRICS meeting is tens of billions in deals being written. So that Iran has agreed to build 6 new refineries in South Africa so that South Africa can internalize oil distilleries and save money in oil imports, which is important to a large developing country like South Africa. And China and Iran have agreed a deal where China is going to build Tehran, a new airport built to their standards of artificial intelligence logistics management for freight logistics that's going to be paid for in oil. And so what BRICS is doing is finding capacity and matching it to need and leveraging development with that model instead of debt. The last 80 years, the development model has been you have to borrow money, go into debt, and then develop. But that hasn't worked very well. No country has actually borrowed its way to prosperity. So I think the BRICS collaboration, because every deal is a win-win deal with joint interest, might actually break the old model of perpetual debt and produce shared development that can produce stronger and more sustainable growth. Another great example out of the BRICS meeting was that DPW, Dubai Ports World, from the UAE, a private company, but with a state interest, is going to build a super container port in India. Now, India has a mammoth coastline, huge coastline. It doesn't have one single super container port to modern standards of logistics, not one. So it has a great need. If India is going to develop, it must have a super container port. And so Dubai Ports World, which runs ports all over the world to the highest standard of operations, has the management, the technology, the finance to bring that capacity to India. That's a win-win deal that's transformative for the Indian economy. I see cooperations like that as changing the prospects of countries through cooperation rather than debt.
I would imagine there are some that would not agree with you.
It's too soon to tell. I mean, the BRICS haven't been going for very long. And there is a lot of skepticism, but we're seeing the alignment of interest that can lead to longer, more durable cooperation. And it's not the selfish imposition of you must do it my way, which has been, the past was this, the IMF, World Bank, there's only one way to do it, and you must do what we tell you to do, and we're conditioning the loan on you doing exactly what we tell you to do. why can't we discuss things? Why can't we negotiate? Why can't we collaborate and agree something that suits our interest? That to me is what's changing, is that countries are realizing that there's optionality, that there are lots of models of development in the world that are different. Brazil is different to Argentina, is different to South Africa, is different to Ethiopia, is different to China. Why can't they share their experience of different models and adapt what works in a domestic context? That to me is that optionality is the game changer and is very, very positive.
Going back to what some might argue, you could almost say that we've always had options, right? I mean, different options to what we're facing now.
In truth, since Bretton Woods system, 1944, there hasn't been that many options. As long as there was only the dollar, and the only way for most countries to get dollar and to borrow dollar was through the IMF or the World Bank, your options were comply with what we tell you to do or else. But if you look at like the top 10 borrowers from the World Bank, Ukraine, Pakistan, Egypt, I can't remember the other 7, but none of them have been able to sustainably develop their economies, even though they incur more and more and more debt. The deal the IMF has just agreed with Pakistan, it's the 23rd IMF facility for Pakistan. What happened to the other 22? Why isn't Pakistan the most developed country on earth? Right? Because each successive IMF deal is just paying off the previous IMF deal because they're in a debt trap. So I actually think it'd be great to experiment with a model that's not based on debt, but that's based on cooperation with an entity, it can be private, it can be state, that's proven it's cracked the problem. Whether the problem is building a port, whether the problem is electrical generation. A lot of the cooperations that China and Russia are doing now are about electricity generation, where, like a country like Niger, where there's just been a coup, they produce $500 million in exports a year, but they don't realize its value. And 80% of their population has no electricity at all. No electricity. They're not given education, they're not given health care, they live without electricity. With China and Russia cooperating on electricity generation, which they now can do at a very high standard, then a country like that can turn itself around because it has resources. And if they then get electricity generation, they can have much more stable development. They can open schools, they can open hospitals. Because without the fundamentals, you don't get any of the development of your people.
The decline of the USD has been predicted for many years, especially after the introduction of the euro, but it never happened.
It did happen. And it's very interesting you bring that up, because in 2021, the euro surpassed the dollar in international trade use. European countries and the euro self-destructed with sanctions. And a lot of people are comparing it to the Plaza Accord, at the point where the Japanese economy was growing fast enough to be a rival in global weight with the US, and the yen was a strong currency. What happened? The United States intervened and imposed the Plaza Accord. And Japan since has had 30 years, 3 decades of zero growth. Ever increasing debt, big debt, the biggest debtor in the world in debt to GDP at about, I think it's 270%, somewhere around, it might be 230%. But still, it's huge numbers. And 30 years of zero growth. So the funny thing about a hegemon is it doesn't just undermine enemies, it also undermines any rival on the stage. And as soon as the euro came up and began to challenge the dollar's global weight by passing it in trade, oops, war in Europe.
Why are so many countries still having a love affair with the USD?
I don't think it's a love affair. I think to some extent that even countries that are aligned with the United States fear what would happen if they were not aligned. And the United States has a lot of ways of expressing its displeasure. I mean, the most obvious, petrodollar states that started selling oil in currencies, in particular euro, other than dollar. Iraq, 2003, there's a war, Saddam is killed. 2011, Libya. Gaddafi proposes that there be a Pan-African currency backed by gold so that they can deal in their own currency without dollar. Country is raised back to open-air slave markets, and Gaddafi is killed. So, and of course, we have sanctions and the U.S. occupation of Syria at the moment. Bombings all over Syria that don't even make the news. And then 2 coup attempts against Venezuela, where Maduro has wanted to sell Venezuelan oil for other than dollar. So that's, I think, there's a reasonable basis for being a little wary of displeasing America. And even with allies, I think there's some of that. Certainly in Europe, Australia, Japan. I mean, if we're honest, Japan has been an occupied country since 1945. The base has never left. Some would say that Japan's never really had an independent foreign policy. And Korea, the same. The only country in Europe that insisted on U.S. bases closing and U.S. soldiers leaving was France. And France has been more independent.
Kathleen, will the RMB be seen as a peer equivalent to the USD, and if not, why?
China is, of course, the largest trading partner to more than 120 countries. So yes, RMB is a very, very important trade currency. But that's trade. Trade in all goods globally is only $46 trillion a year. Oh, that sounds like a big number, right? And 8 trillion of that is oil. It's such a tiny amount compared to the financial markets, compared to the financialization of the global economy. Global debt is 225 trillion. Equities, 108 trillion. Derivatives are somewhere, I don't even know, maybe 835 trillion. Foreign exchange turnover, annually, 1,900 trillion. So 46 trillion is less than, I'm going to guess here, 0.04%, right? Why are we bothered by that? It's a tiny amount compared to the massive dollarized global economy and finance. So of that 46 trillion in global trade, half of it is already in other currencies. Only half of it is dollar, right now, as of last year. So we're talking 23 trillion. Now, any migration away from dollar is going to be gradual. So let's say half of that 23 trillion shifts to other currencies in the next 10 years. It's 11.5 trillion, if my math is correct. But it's such a tiny, tiny amount compared to that 1,900 trillion in global foreign exchange settlements. It's a rounding error. It's not worth stressing over, and it's certainly not worth World War III, right? So let people choose what currency they want to trade in. It's no one else's business. When you transact a payment over PayPal, does somebody come in to tell you which currency to use of their 36 currencies? Because right now I can go on PayPal, I can get payments in any of 36 currencies. I can go on Alipay and get 19 currencies. Does anybody tell you which currency you must choose? No, you agree it with whoever you're doing a deal with. You agree it with the buyer or the seller, right? Why should global trade be any different? When you do a trade, you choose a currency that suits your joint interest, and you negotiate it as an aspect of the trade. And maybe you charge a little more for one currency relative to another. But it shouldn't be that anybody else in the world cares what currency you choose. Especially with trade, where the numbers just aren't big enough to challenge the dollar's hegemonic influence as a global capital markets currency. That all remains unaffected.
But doesn't it make trade easier, though, having a dominant currency?
It has done, but that broke with sanctions. It's been eroding for a while. It's been steadily eroding. Not just sanctions, but also the shift in American fiscal and monetary policies, because a third of all dollars ever created have been created in the last 3 years. The quantitative easing started in 2008, then hasn't stopped. And with the pandemic, the amount of unfunded deficit spending spiked and has continued. The deficit this year is twice as large as the deficit last year, even though tax revenues in America are falling. And so that they're asking the rest of the world to fund their unfunded deficits. Now, that's also reflected in rising interest rates, but it's also created risk. And so other countries are looking at the risks of dollar assets, and they're not as happy as they once were with those risks. Whether it's sanctions, whether it's the volatility in treasury values. Treasury bonds have been hit by the hike in interest rates and have devalued accordingly. So central banks around the world are now buying gold. They've been buying gold since 2008. In 2022, they bought more gold than they've bought since 1967. It's a long time. And in 2023, they bought a record amount of gold in the first half. So they're saying, I'd rather hold gold than dollars. It's a rational judgment to make. Is it making Secretary Yellen's job harder? Yes, of course it is. Is it making Jerome Powell's job at the Federal Reserve harder? Yes, it is. But maybe they should think that the answer lies closer to home in not running huge unfunded deficits and in not doing quantitative easing that undermines confidence in the currency.
So would you say that the declining relevance of the USD is a symptom of weakened US global influence or the cause?
We still, there's so many things in play at the moment. Nobody's sure. Obviously, the UAE and Saudi saying that they intend to sell oil and gas in other currencies. UAE has actually delivered a natural gas shipment to China in renminbi. But you can take that as a sign of loss of US influence, yeah? Or you could take it as a sign of maturity in the Gulf. That in 1974, maybe Gulf states thought they needed US protection, thought they needed US weapons, thought they had to obey or else. And in 2023, maybe they feel mature enough to take responsibility for their defense, to take responsibility for their monetary policy, and to take responsibility for looking at a bigger world in which they no longer sell much oil to the United States. The United States has become the world's largest oil exporter, right? It didn't have that oil in 1974. And where they sell most of their oil to Asia, and over 70% of global growth is in Asia. Over, in this region, there's more than 4.3 billion people in the UG circle. That's more than half of humanity. Why wouldn't you want good relations with the part of the world that's growing? And to stabilize your own economy by aligning your economy as an oil exporter with your largest clients. I mean, to me, that's a sign of maturity and good policy, not necessarily a sign that the United States lacks influence. I think countries in the Gulf want to maintain good relations with the United States, but they're also realistic enough to see where their oil is shipping and who's buying it, and wanting good relations with other states as well.
You talked about cooperation in our first question in your response. We're in Asia, you've flown out here to Hong Kong. Do you have any suggestions, solutions for the region?
It's not up to me to advise. I work with central banks, and one of my principles is that I never tell them what to do. Because, you know, they all want to know, they all want to think that they're making the best policies, and that's fine. I will say that I am impressed with the direction in ASEAN, where 19 countries collectively met in May and agreed that they would move to trade in local currencies. They don't have the solutions yet. I'd like to build those solutions. I can do that. That's what I do, is build multilateral, multi-currency solutions. But they have made the decision among themselves that it's in their collective interest to shift to local currency trade. And some of them, I think it's Malaysia and Indonesia, are now sharing payments codes. So you can use your QR code in either country, and it seamlessly clears in real time through payment linkages. I think that's great. I'm impressed with the way CIPS has opened up globally, but then so has Reserve Bank of India. They've opened their payments platform to 20 additional central bank peers and 60 new commercial banks globally. That's great. Who else has done clever things? Well, there's so many of them, and they're innovating at an accelerating pace. Now that they've looked at the world and thought, oh, what would happen if? They're coming up with new ways to collaborate. And maybe not all of them are great, maybe not all of them are perfect, but they're trying new things, and we're going to identify where the outperformers are, right? We're going to identify the models that work. And by sharing and collaborating on the models that work, I think we build stronger, more sustainable growth.